Okay, good morning, everybody, and good evening if you're dialing in from North America. Welcome to the Shaw and Partners Uranium Conference. This is the eighth of these conferences that we have hosted over the last really 5 years now. Always very well attended, and always very happy to have a whole heap of quality uranium companies presenting their stories to Australian investors. It's a very interesting time to be talking about energy, obviously with situations going on in the Middle East. And I must say, I'm a little surprised that the uranium sector hasn't performed better in the current turmoil. Clearly, energy security is first and foremost in what's happening with the Straits of Hormuz, and I would have thought that nuclear energy would be getting a positive boost from concerns around that. Look, I'm going to make some opening comments for about 15 minutes. I don't normally speak for that long in these conferences, but I think given that we at Shaw and Partners have such an out of consensus call on the uranium price, I thought it'd be worthwhile explaining to people some of the rationale behind that view. We will then go to hear from two of our international speakers, Trevor Klingbeil from Trade Tech and John Ciampaglia from SPUT, who will probably do a better job than me on explaining what's happening in the industry. And then we have 10 interesting companies active in the uranium sector to talk about what they're seeing in the industry and in particular the projects that they are bringing in. So let me just take you through our views on the sector and why we see this as being at the dawn of what we're calling a super cycle. So that's the Shaw forecast for the uranium price over the next 10 years. And you can see that we recently upgraded that price deck, even though we were already well ahead of market. We're now expecting to see uranium prices head to $200 a pound before coming back to some sort of long-term sustainable number early next decade of around $120 a pound. Now, that long-term price is certainly not out of consensus. We are noticing that a number of banks at the start of this year have been upgrading their long-term prices. Consensus 12 months ago might have been around $80 to $90 a pound. It's now well and truly over 100. But I think one thing that a lot of forecasters are missing here is that this is an industry that is already structurally undersupplied. We're going to need to see an incentive price environment for a number of years to encourage supply back into the market. And there needs to be an upcycle before we end up at that long-term equilibrium price. And the upcycle in this sector could be enormous, as I'll explain in a moment. So this chart here shows you the challenge the industry has got to meet uranium supply. That red line in that chart is the base load or the baseline forecast for uranium demand from the World Nuclear Association, which I'll come back to in a moment. The bars in the chart are what we can see in terms of uranium supply as it sits today, plus new growth that we see coming through in the various projects, plus also obviously some depletion in existing production from some of the existing producers. And you can see that the market is undersupplied as we sit today in 2026 to the tune of 40 to 50 million pounds of uranium per year. That number remains fairly steady out to the end of this decade, with growth coming through from Cameco, from Africa, from Kazatomprom, but demand then accelerating into next decade at a time when supply is depleting. And by the time we get out to 2040, there is a significant gap there in supply and demand, which I'll come back to in a moment. Interesting, last year, the World Nuclear Association at their symposium in London released their biennial report on the nuclear fuel market. Every 2 years, they update their numbers. Their reference scenario is now projecting that the world's going to consume pretty close to 400 million pounds of uranium by 2040. So very similar to the numbers that we are projecting. There is an upside scenario there of 530, and even in the downside scenario, the number of 278, that is significantly above the current consumption number of around 190. So even in the low scenario for uranium demand growth, we're seeing best part of 100 million pounds of new supply required. When you look at that in charts, it looks pretty incredible how much additional new supply we need. So there we are in 2026, current demand 200 million pounds, current supply about 160. When we go out to 2040, what I'm showing you there is the low, the base, and the high side scenarios from the World Nuclear Association. The black is the demand. The grey there is where supply will be in 2040 from existing production. So although we are currently producing 160 million pounds of uranium, by the time we get out to 2040, about 100 million pounds of that uranium supply has been depleted. Big assets like Cigar Lake from Cameco currently producing on a 100% basis, about 18 million pounds of uranium. That will be gone. You've got even some of the new restarts. The Langer Heinrich operation for Paladin having just restarted, will be depleted by 2040. You've got a big tail in the Kazatomprom production as the ISR operations tail off through next decade. Clearly, they will spend money and try and maintain production rates there, but from what we know today, that production declines. So not only do we have to find new supply for the demand growth, we have to replace the existing supply that's depleting. So those orange bars there show you how much new supply of uranium we need to find by 2040 to meet the demand projections. So even in the low case scenario, we need to find over 200 million pounds of new uranium production. In the base case, it's over 300. Now, if you put a spreadsheet together of all the projects that we can see on the drawing board, whether it be the Rook project for NextGen, whether it be Patterson Lake South for Paladin, whether it be new production in Niger, whether it be production in Namibia or Uzbekistan, you can get yourself to, in an optimistic case, about 150 million pounds of new supply coming. And I guess the question then is, well, where is the other 100 coming from, or perhaps even 200 coming from by 2040? Now, 2040 seems like a long way away, but in uranium mining terms, that is literally tomorrow. If we found a new uranium deposit today, it would take 15 years of exploration, permitting, construction to get it into production. So this is a real issue. It's an issue that I think actually ends up becoming the rate limiting step for the nuclear power generation. So some of those demand numbers there that we are seeing, will literally not be able to be achieved, not because they can't build the reactors, but because there just won't be enough uranium to fuel them. I thought interesting this year, this outlook is certainly starting to be recognised by the big strategic buyers, particularly the Indians and the Chinese. 3 big announcements have been made already this calendar year. CNNC, which is a state-owned enterprise in China, you'll recognise that name as the partner for Paladin in Langer Heinrich, have signed a 60% offtake for the Etango project, Life of Mine. So that's a big project. It's potentially expandable up to around 6 or 7 million pounds per annum of production, and the Chinese have locked up 60% of that for the future. India has signed 2 big deals this year. One with Kazatomprom, over 40 million pounds of uranium supply from Kazatomprom, and Cameco has signed a deal for 22 million pounds, starting with first production or first supply, I should say, in 2027. And the interesting thing about the Cameco deal is that they actually don't have that production available. So I'm not sure where those pounds are coming from. It will probably mean further purchases in the spot market for Cameco. And then the other, the big issue down the track is, what's the US government going to do? Clearly, uranium supply is a key strategic weakness for the US administration. Last year, the US consumed 50 million pounds of uranium, but only produced 1. So, I mean, clearly they need to come up with new supply. And we've heard Chris Wright, the energy secretary over there, talk about the need to build a strategic stockpile. So if we start to see the US government coming in and locking up pounds, then clearly the utilities are going to be left behind to a degree. I'm not going to go through all these points in detail, but in terms of demand drivers, supply issues, I have rarely seen in my 30 years of being a mining analyst a setup as constructive as this for a commodity where demand is relatively easy to forecast, clearly growing. Things like the now 33 nations pledging to triple their nuclear capacity by 2050, all being driven by decarbonisation of energy grids. Most governments around the world realising that you can't do that purely with renewables, and that some sort of baseload power is required. If you can't do hydro, nuclear is going to be it. And then on top of that, we've now got all this demand for electricity in the world for data centers and AI, which for the first time in 20 years, we're now seeing strong growth in electricity demand in the US, for example, which is putting pressure on pricing there. It's putting a bit of a backlash from consumers and from regulators about the industry sucking power out of the grid. And if you want to build your own data centers now, you need to come up with your own power source. Nuclear is clearly the best way to do that without adding carbon to the atmosphere. And then on the supply side, this is an industry that's had 10 years of lack of investment post Fukushima. We're just rebuilding essentially a lost decade in the industry. We lost a lot of people. We lost a lot of companies. We had virtually no exploration for 10 years. We are now rebuilding the supply pipeline. Major new supply is really still years away. The big one, obviously, the Rook project from NextGen, not till next decade. And we're discovering, as we always knew, that mining is not easy here. So the restarts haven't been going to plan. It's easy to put this supply in a spreadsheet. When you actually have to try and develop it and build the capacity, it's not as easy as you think. One key thing is inventories in this industry. With that downturn post Fukushima, there was a big inventory build for a number of years. It's difficult to get visibility on what those inventories are and where they are stored, but clearly inventories are not infinite. And it feels like, in the last couple of years that we are now at the point where those inventories have largely been drawn down, and we're now starting to see, as I said earlier, these strategic announcements from China, India, and potentially the US trying to rebuild inventories. And so, the question I always get asked when we're marketing this view around, why this industry is heading for such a super cycle is why aren't the utilities panicking? When you look at the Western utilities, their level of fuel buying still remains relatively subdued. They only contracted around 116 million pounds of uranium last calendar year in 2025, well below replacement level. Why are they so calm? Why aren't they locking in pounds like the strategic buyers are? And I think the answer is really twofold. One is that there is no shortage of uranium in the next 2 or 3 years. Utilities, all the uranium they'll be using in their reactors the next 2 or 3 years has already been purchased, converted, enriched, and is probably in fuel rods already. So there's no near-term emergency for them. Secondly, I think uranium price is just not a major issue for them. Their view is that whatever the price is of the day, they will pay, provided they're not paying more than their neighbour. So they tend to move as a pack rather than individually. They don't want to pay up ahead of time, but if they have to pay $200 a pound for uranium in 4 years' time, well, so be it. Maybe they pay $300. Uranium is not a big part of the cost of nuclear energy, I should say. The key cost is clearly the capital cost of building the reactors in the first place, and then of the operating costs, uranium is a relatively small part of that in the fuel chain. So, this is an interesting commodity in that, unlike a lot of other commodities, there is no demand destruction price. There is no price at which utilities will not buy uranium once they've got a reactor fleet consuming that uranium. So, we could see uranium prices go to numbers that even leave my $200 a pound forecasts looking conservative.